Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Rachel Reeves' nightmare, as UK families told to brace for £1,000 tax hammer blow. Rachel Reeves is facing a political nightmare as hardworking families across the UK are being told to brace for a tax hammer blow starting in April 2025. A new study has indicated that British households will pay an additional £1,112 on average in taxes due to the government's sweeping reforms, which are set to raise nearly £27 billion for the Treasury. Families already struggling with rising living costs will feel the impact of higher national insurance, council tax, capital gains tax, and stamp duty, with some regions bearing the brunt of the increases. The analysis, conducted by Policy Engine for the Institute of Economic Affairs, shows that the increases will disproportionately affect the South East, West Midlands, and East of England. The hike in national insurance alone will cost households an average of £818 per year. Read more. Billionaire exodus continues as one of UK's richest men to leave over Reeves. Basic rate taxpayers will also see a near doubling of capital gains tax, adding an average £150 to their tax bill, says the IEA. Council tax will rise by 5%, costing families an extra £96, while stamp duty changes, which lower the thresholds for first-time buyers, will add £48 on average. Tom Clufferty, the IEA's executive director, warned that the tax increases would undermine economic growth. He said, "The tax increases coming into force in April will weigh on household budgets and undermine economic growth. Don't miss new tax rules to hit 4 million people this year. How to check if it's you insight. Millions of Brits on 20K or more warned of spring budget tax change deadline analysis. Crackdown on HMRC tax avoidance and what you need to watch out for pictures. We use your sign-up to provide content in ways you've consented to and to improve our understanding of you. This may include adverts from us and third parties based on our understanding. You can unsubscribe at any time. Read our privacy policy." The employer's national insurance hike is a slap in the face for business, coming hot on the heels of a big corporation tax increase, and alongside an increased minimum wage and more onerous employment rules. Mr. Clufferty added that the higher taxes would ultimately affect workers most, leading to lower wages and fewer opportunities. Chancellor MS Reeves defended the government's position in her spring statement, claiming, "We understand the pressures families are facing, but these reforms are vital for long-term economic stability. We need to make these tough choices now to secure our financial future and support public services." However, critics argue that the tax hikes will hit the lowest-income households the hardest, exacerbating the strain on already stretched budgets. The regional effects of these tax increases are stark. According to the study, median households in London will pay an extra £718, while those in the West Midlands will face a £637 increase. In contrast, households in the East Midlands will see the lowest increase at £422. Despite these disparities, the study makes clear that no region will be immune from the tax hikes. These changes come after years of fiscal drag, where income tax thresholds have remained frozen, pushing more people into higher tax bands. The total £26.95 billion raised by the reforms will have a significant impact on households, with national insurance accounting for £22.9 billion of that sum. In a fresh blow for MS Reeves, a YouGov poll released today showed 7 in 10 Britons, 70%, believe the government have managed the economy badly since they came to power, compared to just 19% who feel they have been successful in their handling of the matter.